All right, hello. Welcome to our module 2 all about accounting concepts and principles. We'll be going around the topic qualitative characteristic, accounting assumptions, the accounting principles and lastly the constraints. So I believe on module 1 we have already had the understanding of how accounting is done, what is accounting, and all that background information that we had regarding the world of accounting. And so we'll now move forward to, how does this world works so that we will have those standards in place and where those standards actually play and how it started. Well, part of the history is that, US had its way of standardizing the accounting policies, steps, procedures, and how they should go about their accounting practice. And so they have set up GAP, okay, the generally accepted accounting principle that, by definition, is a common set of accounting principles, standards, and procedures that companies must follow when they compile their financial statements. And again, the GAAP was originally made in the US because that is now a requirement for all of the US publicly traded companies to apply in their business. But this US GAAP has a specific characteristic that is usually what we call as procedure based or a rule based standard, in which, when we say rule, it should be followed in that particular case or scenario. So it's a very straightforward one. But currently, the IFRS, or the International Framework Reporting Standards, have been formed by the International Accounting Standards Board, or the IASB, in order to globally introduce a standards that is applicable to all of the business regardless of where your country is at. So US GAAP still exists, okay, but mainly again it is usually observed in the US, while IFRS seeks to somehow give that standards that all of the countries can apply. And so they are also, in comparison to US GAAP, they are now looking at a principle based standards, meaning they will give out a scenario and the companies can adopt those kind of practices or procedures suiting and fitting for their kind of business. So the difference between a rule and a principle is like more like when you say a rule that again it should be followed directly regardless of maybe the foregoing circumstances. Where we say principle, again this is an assumption, and so with that assumption that's running around, you can apply it to your own business, you know, with those kind of standards in place. All right. Now, we'll on our discussions mostly, especially in the Philippines, we are now adopting the IFRS and we call that our own as the PFRS, or the Philippine Framework for Reporting Standards. Okay, so IFRS also introduced what we called as the conceptual framework that houses all of the fundamentals with regards to financial reporting. So this conceptual framework, as what they say, is not yet the standard. Okay? Again, it's just a foundation on where those standards can rise up to. So this conceptual framework would assist with the IESB to develop the IFR standards that are based on consistent concepts. And so this conceptual framework also help in the preparers to develop those consistent accounting policies when no standard applies to a particular transaction or event. So mainly it help us to every user of your financial statement, whether on you are on the planning or the standard setting board or even the preparer, and even the parties that would need to understand and interpret the standards. So, again, this conceptual framework is just a foundation. So, it's a framework, I would say. That made sense already. And so, this framework would now support how the standards are being formed. Okay, so that's why it's there, but it's not part of the standard yet. It's just a blueprint on how things or how standards should be created. So, if a standard would be created that does not align with the conceptual framework, then that's something that they need to discuss. Whether that change is applicable or whether that change should be disregarded kasi nga it goes away from the conceptual framework that we have here. So, part of the discussion of the conceptual framework is now discussing the objective so that from there they would align. If this is our goal, then how should we go about it? So, they define their objective for the financial reporting, which is to provide financial information about the reporting entity that should be useful to existing and potential investors, lenders, and other creditors, which is actually one main group, which is our primary users, in making decisions relating to providing resources to the entity. So main highlight here is that they want to have that usefulness of this information that we are reporting. And so more than the quantitative information that we are disclosing, in order for those numbers to actually be valuable and be useful, the conceptual framework introduces these qualitative characteristics that should be provided in your financial reporting, or it should be embedded. And so they have this fundamental qualitative characteristics. That's just the main two characteristics that we see. Firstly, is we want to make sure that the information that we have is relevant. Relevant in the sense that it is capable of making a difference for the decisions made by a user. And on the other side, we also have the faithful representation that would say that, of course, the financial information that we have must faithfully represent the substance of what it purports to represent. Now, I have a more or less the picture here of the financial statements reported by Pure Gold Price Club, or P Gold, coined in our Philippine Stock Exchange. So they will present this information, right? And we understood how this information could go about, not just this one, but it goes long, maybe as more than 100 pages or so, because they contain all the information about the business, not only just, picking out something and just reporting it, but in totality, this should serve as the whole picture of Pure Gold Price Club. But the thing is, ang sabi sa qualitative characteristic natin, this information can be useful only if this information is relevant. And secondly, if this information really tells what it tells, that's why we have the faithful representation. Now, how can we know if an information would be relevant, or when can we know that it is actually faithfully represented? So the whole picture of that concept of the conceptual framework, again, the goal was they want to make sure that the information that we got is useful in our decision. And again, to be able to reach that, we'll have to be relevant. Those information should be relevant to the users, and it should be faithfully represented. So next question would be how to make sure that our financial reporting would be relevant. So our conceptual framework also requires three components, or at least made this three aspect seeable or applicable in our financial reporting. Firstly, is we have the predictive value. So let me go ahead and check that. On the predictive value, it says that those data, this information that you have is relevant if it can be used as an input to process employed by users to predict future outcomes. So, meaning the information that you have here is relevant when it could pinpoint you to a direction based on the current standing that they have, the current values that they have. That is the predictive value of your information. The second is for your information to be relevant, capable of making a difference. Your data should also provide feedback about previous evaluations. So, meaning if you can pinpoint where your business is going through the data that you have, it should also give you an idea of where was it at on the get-go. So, meaning kung predictive value and confirmatory value are actually on more or less on the same page, in where of course you will predict something. So once you report the next year around, you should be able to confirm what you have predicted from that. And from there, you will get feedback whether from what you predicted, does it align to what we have right now? So that is the relevance that we are seeing from those financial statements. For example, let me go back to our previous financial statements. If you can see here, our financial statement, you can take a focus on the financial position side. It's actually presented into columns, right? We have the June 2024 and then the December 2023, which is the previous period. So for this side alone, the confirmatory value would say, you can try to predict on what will happen on December 2024 with the values that you have here. Okay, that is the confirmatory predictive value. Sorry, the confirmatory value is that you can compare your previous and your current to say where your business have been after that period. So, for example, in December 2023, you can see changes on what happened now in June 2024. And from there, you could compare. If cash from 41 million is now 32 million only, we can have a lot to say already. And from that change that we see, we can now have also the idea on where our decision would also taking sides. Okay, but again, that's just a piecemeal of the analysis and the glimpse of how we can do about the information that we have in accounting. The third is materiality. Now, this materiality thing is more or less a big deal when it comes to accounting kasi, you know, for a thing to be relevant, we want to make sure that it is material enough for us to consider. When can we say that an information is material? If by the omission or the misstatement of that information could influence our decision, meaning that would be material. For example, okay, let me set this story. For example, you own a store that is worth around 10 million. Okay, and so right after that, there was a missing 1 million along your books. Now, if you may put a question, is a 1 million material to a 10 million business? So that's around 10% already. So the answer, of course, will be yes. Now, if you have that 1 million, compare that one to, let's say, a bigger company, let's say that has 100 million. That 1 million might be not that much of a difference, if you may say. But of course, 1 million is still 1 million on our eyes. That's already big. But again, considering the size and the nature or even the company itself, we have a different opinions about materiality. Okay, it's not fixed. Usually, this is based on the judgment of the one preparing the financial statement. For example, the very main thing is, for example, you lost 100 peso on your cash fund. Do you need to report that in your financial statement? Do we need to know na nawawalan sila ng 100 if that company is a 1 million company? Well, as a user, that would not be significantly important to us, right? Kasi that would not change. Say, for example, you're considering offering a loan. Kung alam mong may 100 peso na nawala sa company na yan, then that would not really be a big concern on us as a reader. But if that is speaking about 1 million, let's say nawawala is 200,000. And so they're asking for that loan if you're the bank, then you would be concerned. What is happening to the 200,000? What are the steps that they're taking? If you didn't know about the 200,000, you would just, think of it na parang, okay, this is a good company. But if something is missing and it reach your ears or it reached your information, then that would significantly also affect how you would proceed with some of the things that you have with that business. Do you get me? Again, this is about materiality. Now, materiality is also one of the principle that we are actually considering, or assumption we are considering in our financial reporting, in which sometimes the recognition or the classification of an item would matter according to again the set materiality that we have. Okay? And hopefully you already get a visual on, talking about materiality in the long run. And it is part of the conceptual framework because we have to put it out there that, an information should be where it should be. That's our financial reporting if needed. Kasi if that materiality is missed out, then definitely lahat ba kailangan nating i-present? Or can I hold back some of the information na parang hindi naman siya ganun ka useful? So again, aligning back to our goal, we want to make sure that all of the information that we have there should be relevant. And again, largely that should include the consideration of materiality. And usually this materiality is even disclosed in our financial statement. No, how much or what is the line in which the an item would be considered material or a material. Okay, so that's on relevance. On the other side, we also have, faithful representation for our reporting, for our financial information to be for useful. We have to make sure that it fully represents itself. Now, that full representation would also mean the application of substance over form. Now, this is a particularly famous phrase that we actually have in accounting. When we say substance over form, we overlook what is, physically seen or what actually usually legal on its face. We have to go deeper on what is that transaction really all about. For example, I can let me give an example of substance over form is that for a goods to be considered sold, dapat na-deliver mo na siya, right? So once that is delivered, then you could already recognize that in your book as revenue. Well, on some other cases, okay, in a special cases, we can go past that delivery that has to happen for us to recognize revenue if there is a uh, particular agreement that was already made by the business. Say, for example, it's for a specific agreement now, the goods, once the agreement has been signed by the customer, then technically sa kanila na yon, regardless of when it is delivered. So meaning, by the time that the agreement had been fully signed, even though hindi pa na-deliver yung goods, that's already constituting the recognition of the revenue. Okay? Again, we are not just mainly be plainly looking on how things is going, and that's why we need to look on that area din na kailangan nating pagtuunan ng pansin. Na sometimes, some of the transaction do not just, are not very straightforward, I may say. Kasi kailangan mong maintindihan, what is this transaction all about and where does this come from? Para you would know as well how to process in your financial statement. Okay? So you have to think it through as well kasi your user would also want all of those information also presented in there more than again the form of where your business is, seeing is at. Okay? And how do we say okay that my financial information is already faithful as presented? Firstly, we will have to consider completeness in the sense that all information that is necessary for the users to understand the phenomenon being depicted, including all descriptions and explanations. So we are talking about here na kung nakikita natin kanina yung financial statements, including a snippet of their notes, Mainly, kung titingnan lang natin siya on financial statement, the first four reports that we may have, we might be having a lot of questions, right? Like, okay, ano tong cash na to? Or what do we have here? We have a merchandise inventory that's around 30 million. What does it mean? Anong meron dito? So, one part of that is that more than the figures that we are seeing, there should also be an information that should be provided so that we're not just be seeing numbers and interpreting it on our own, but rather we are being supplemented with the information on how we specifically read those data or those information that we have on your financial statements. Okay, so that's completeness. Neutrality, on the other hand, would mean that no errors or omissions in the description of the phenomenon and even the process used to produce the financial information that we have here have been selected and applied in the process again with no errors. Neutral, meaning free of free from bias. It should not be in a sense that, there's an omission or you would have to remove something that's like hiding something, or you're just missing it out kasi sinabi nila, di ba? A half truth and a half lie is still half lie. So we don't want to end something like that as well in our financial statement. And neutrality also introduced this prudence na characteristics. Prudence means conservative. Okay? So, in that way, when it comes to prudence, you want to make sure that you are leaning on protecting the interests of your business, but you also have to make sure that your assets, your income, at the very least, is not overstated. What does that mean? So, meaning if there's an apparent losses or if there's an area of your business that might be losing, you will have to consider that one as soon as you know it para mapakita mo na agad siya on your financial statements. So, you don't need to hold back until ma-finalize na yung loss or the loss had happened na. Even as you anticipated, you already record it in your financial statements. That's being prudent. Okay? So again, you will protect yourself. Now, you should not be overstating your assets, or neither are you overstating your income on the other hand. So again, free of bias style. The next one is that we want to also upheld that all of the information that we have in our financial reporting is free from error. So this is without bias as to the selection or presentation of financial information. So free from error would mean that although we have a assumption or principle based accounting, okay, that's brought about by the IFRS standard, again going about the principle based one. So therefore, even with those application of the principle, we should not just be selecting for our own benefit, okay? Or neither are we just, nitpicking on what you think would give us the best information that we will have to give for our business. Again, we want to make sure that our information that we have presented in those financial statement are actually useful, and for that to be useful, dapat mapagkakatiwalaan yung financial statements natin. So all of this financial representation would stir up that reliableness of our financial statement as a whole. Okay? So let me try to give this on clear end then. When talking about this qualitative characteristic, we have the fundamental characteristic. Now, if you have heard, accounting is a language. Okay? And I have put this in a way that, these standards are like grammars that we need to impose and we need to observe so that we would really be able to communicate properly in that language that we are talking. And so, going about this qualitative characteristic as well, I'd like to circle around fundamental characteristics that's more or less is like the fundamentals as well of grammar, meaning this should be applied regardless. Okay, but in order to add value to that grammar and how we are speaking, we have also what we call as our enhancing characteristic, in which we'll be having a thorough understanding kung ito yung fundamental characteristic natin and ito yung enhancing characteristic natin, what do this for actually would mean to our financial information that we are presenting. So we have four enhancing characteristics. We have the verifiability, comparability, understandability, and timeliness. Firstly, for our information to be of more value, meaning more than being relevant, more than being faithfully represented, it should have that characteristic as well, that it should be verifiable. Meaning, if other people would read your financial statement, you would have the same understanding of how your business is doing. So this is the consensus that we are talking about. Although it doesn't necessarily mean na lahat ng items doon you have agreed, but at least you can say that this information that you have here can is faithfully represented in all its sense. Again, that is agreed by most of the users. Okay, that's verifiability. Meaning, kung chismis to, okay, we want something to be verifiable, right? So when you talk about this to a particular person, you can confirm the same view that you have as well with another person. So verifiability in this context as well is, again, if you have this information about this company, if I would read about that financial statement, I would say the same thing. Okay, more or less. Although again, there are gaps because we have different understanding, different knowledge as well. But that's generally how verifiability also adds to our financial accounting information. Secondly, we have comparability. So comparability would highlight more on the similarities and also the difference among items that we have in our financial statements. Okay, I think it's very straightforward one. Comparability on the other side, or on the connecting side, also deals with consistency. Mhm. Being consistent, meaning you follow the same rule on how you would account, your transactions or your business, how you would go about the accounting. So kung paano mo ginagawa yung policy mo, if that is consistent, meaning you follow all of that across time and across your transaction, then you'd be able to also achieve that comparability. For example, ang pinaka famous would be depreciation. If all of the time, pinapractice mo is you want to go straight line method, okay, it's a particular process in which you will, assign the cost of your items throughout the specific period. Usually we call that the usefulness period. And so if you follow that policy across time, you'll be able to compare as well your information that you have across those periods. So if you can compare 2024, you can, if you're applying the same policies, that you can compare your 2023 information. So more or less, you can say this as parang, if you're taking a quiz, mhm, you're taking a quiz, you have the same items, okay? So you have the same study habits that you made, okay? And you're taking that quiz for this month, and then next month, the next month. So you're consistent in applying and getting through that quiz, okay? And you'll be able to as well compare, without additional analysis. Say for example, yung first quiz na nakuha mo, ito lang yung score mo, 20. The next quiz that you're taking it becomes 30. The next time you're taking it becomes 50. Then you could draw a conclusion. If you compare those values, you will see the difference. No? If there's a 20 difference on your score, then that should mean something. If that's a 30 difference, that also would mean another thing. And so again, you're able to check that kasi nga all of your procedure, all of the items that you have there are consistent. Okay? So we would finally say that yes, consistency is actually our key to comparability. Okay? And then we also have understandability. Understandability would mean that, classifying, characterizing, and presenting information clearly and concisely to the discernible knowledge of our user. Now, financial statements are not prepared for, of course, grade schoolers, but we would expect to those who are using those financial information had already that level of understanding about how accounting goes about in and out. So, how you present your accounting information should be at least, clear and concise to what it says it has. Okay? And then lastly, the timeliness. Having information available to the decisions maker in time to be applicable, to be capable of influencing their decision. If you have heard this story, then it's okay. But this is my personal experience that I was running a project that's been going around for years. The thing is, when I enter into that project, they don't have any financial statements that would show, the condition or the status of their financials with the project that is ongoing. So I was confronted by the manager who would require to produce those financial information. And so, dahil I was newbie at that time, it took me a lot of time to also figure it out, how to do it, how to do that. And so, the information actually reached at least sa dulo na ng project. It's almost done. And so the manager confronted me that, this is not how accounting should be done. Okay, what's the point of having that financial statement at the end of the project if you could present it in a way, for example, on an interim basis, and may that be annually or per quarter as needed, so that the manager would be able to provide decisions that would somehow make a difference towards, the end of that project. Kasi ang sabi niya, okay, binigay mo ako ng information, the financial statement at the end of the project, what can I do now about it? Hindi ko naman, mababalikan at, baguhin yung policies or standards on the operational side para ma-improve yung uh, accounting performance natin. And so that's just like reading the profits. Okay, this is my profit at the end of the period. Where in fact, between those periods, I could have, changed something in between with the information that I got para there's awareness and also I can have basis on where I am moving. So again, that's the timeliness that is required for most of the business, that for this information to be valuable, at least present it in the manner na kung kailangan ko siya, na-present mo na siya by that time. Okay, it's just like, chismes. We all like chismes. For example, that's coming at then hot, then that would be very, interesting or something mind blowing. But if that information occurred like last month pa yan na chismes, sabi natin panis na yung chismes na yan, right? Same goes through as well with our financial statements. Okay. And then last piece of discussion that we'll have today is that at the bottom of this characteristic, even though the application of this one, we can't really still fully consider accounting information as perfect. You know why? Because of the constraint that we are also facing with the application of these concepts that we are talking about. For example, if you want something to be relevant, of course, you're only focusing on material things, material items that we have in our account. So, what happens about the immaterial ones, right? Or if you're talking about neutrality and we are applying prudence, that we are trying to, sell out our business in a conservative manner, meaning all losses, possible losses considered, this is still the foot of our business, then again, there's still something going on there. And above all that is what we call is the cost constraint. Ito yung pinakamalaking kalaban natin with regards to providing information. So this constraint or limitation, as much as we would want to tell, how valuable this information is, or the information that we presented, we still have to check it out if that is actually beneficial to the one who is using that financial statement. So, accounting information is a process as we know it, and so it undergoes a lot of things and would consume resources, such as it may be the cost of collecting and processing this information, even the people that are involved there. Might come from the potential litigation or disclosure of some competitors. But regardless of that cost, I mean, with that cost that you have incurred, it should still pinpoint you towards the benefit that you will get out from presenting those information. So if that information would help us, have that greater management control and access to capital, then that would be more appealing to us that we need to disclose that. Now, this constraint is actually, the whole core as well about accounting. For example, an accounting standard that would really be not that that would not lead to a greater benefit rather than incurring that cost, then hindi siya pwedeng i-apply natin. For example, hopefully we understood about audit, that audit is there to make sure that we have all of the controls, and even the we are in the place wherein all of the information that we have there are actually correct, that's being reasonably correct, or wala siyang error. That's where audit come in, right? So uh, kapag yung standards or policy would tell you na, okay, you have to have an audit at least monthly. Okay? What if yan yung i-impose natin? Well, the thing is, audit is costly on the first hand. But if you will also check the benefit, yes, you are in the right track. You are very reliable as a company kasi isipin mo yun, monthly kang nag-audit. So, all is check monthly. But the problem is, does it yield to the greater picture about our company? Do we really need to have that audit per month? Kung pwede? Now, what can you observe sa businesses natin? The audit is actually just required annually. So if they think that annual is the best because the cost of that audit would somehow still be greater than the benefit that we are still getting. You get what I mean? So hindi pwede sila mag-impose ng standard or ng policy in which it would put the business on a setback. Okay? It should still be benefit giving to them. And so they have this parang cost benefit analysis before anything could be applied, or policies that should be implemented. But the problem about then sa benefit analysis is that it's hard to measure things. Even at the cost, yes, maybe makikita natin yan clearly, but the benefit might be a different thing that we need to furtherly consider. But again, we should still be able to see that benefit should exceed the cost that we have incurred in providing those information. Okay? Hopefully that made sense. And so please go ahead and go over our next video posted in our module that's going about the accounting assumptions, principles that we have and can apply in our accounting. So that is all for today. Thank you so much, guys, and I'll see you the next time. Bye for now.